guys, welcome back to my channel. It's really nice to have you here again, and thank you so much for subscribing and for sharing all of my videos. Now in today's video we're going to talk a bit about the directional bias for Euro USD on a longer term. Now I have in here a daily chart which I have opened, and I'd like to go through the normal process to show you exactly what are the elements based on which I usually take my directional bias on a longer term, and then we're going to go on the lower time frames and see exactly what elements I'm actually looking for to know whether I do have a setup that really deserves my attention or not. So as you can see right here, we have a bearish trade going on with half a standard lot. My stop loss is roughly around 30 pips, and my take profit is going to be naturally around 1 to 3 risk reward ratio. So we have a stop loss of a bit over 27 pips, and we also have a take profit of almost 90 pips. So as I said, the reason why I'm making this video is just to go through the normal process with you guys that I usually use in order to decide whether I'm going to be a buyer or a seller on a longer period of time. There are just a few elements that I'm looking on the daily time frame, and the most important thing that I'm looking for is to see where did the last reversal in the market happen, the most obvious reversal that I can see on this chart. And also I want to see, based on the information that I have on the last 60 days prior to the reversal, I also want to somehow try to predict what's going to happen within the next 60 days following the reversal. So the most eye-catching information, or the most eye-catching spot that I can see, is going to be this this high in here. So clearly when we reached this high, we actually started to reject, and then we can clearly see that we had a break in market structure, and the market has actually turned bearish from there. So I'm going to note this spot here on the chart as my last most important point of reversal. Okay, so we're going to note that with a vertical line. Now I'm going to take the cursor, the crosshair, and I'm going to count 20 days. So I'm going to take another vertical line, and I'm going to note that down. So right now what I'm going to do, I'm going to replicate the blue line again. So from here till here we have the last 20 days prior to the reversal. Okay, then from here to here we have the last 40 days prior to the reversal. Okay, and we're going to draw one more line, and from here till the point of reversal we have the previous 60 days prior to the point of reversal. So we're going to use this information. So basically the entire area from the lowest point of the last 60 days till the highest point. Okay, let's make this a different color. So I'm going to use that in order to try and predict what's going to happen within the next 60 days after the reversal. So we're just going to do the same thing. We're going to take this line in here, and we're going to start duplicating the vertical blue lines. So these are going to be the first 20 days after the reversal has taken place. These are going to be the next 40 days. So it means that we have defined another 60 days in advance in the future, starting from our reversal point. So within this entire area in here that we have marked with this slightly gray rectangle, we have some information that the market has left for us as sign in order for us to be able to decide whether we will be buyers or sellers within the next 60 days, starting from the reversal point, based on the last 60 days prior to the reversal point. So the first thing that I can see here is this fair value gap. And basically a fair value gap is, let's just think about this for a second. So we can see that the market is going up, then it's making a retracement, then it's going up again, it's making a retracement, then it's going up again, it's making a retracement, and so on and so forth. Now, usually, generally speaking, the high of the previous day will normally coincide with the low of the following day. Okay, so this is my middle day, this is my previous day, and this is my following day. So we can see here that the high of the previous day, which is this one, is perfectly coinciding with the low of the following day. Now, if we're going to move this line further and we're going to consider this candle as being the middle candle, we're going to see that the high of the previous candle was actually touched by the low of the previous candle. So we don't have any fair value gap in here. Now we do have a fair value gap in here in the idea that if we were to consider this the middle candle, then the previous day's high has not been touched by the following day's low. So we could say at this point that from the high of the previous candle till the low of the following candle, we have a fair value gap. Now, the thing with fair value gaps is that they need to be filled. Okay, so basically a fair value gap, it means that there has been more buying than selling, which means that the market has not been efficient enough. And as we can see, 2 months later, the market has perfectly closed this fair value gap, and then it has continued to move higher to new territories. Now, it doesn't really matter the amount of time that is going to pass until a fair value gap will be filled, but what you need to understand is that it really depends on the time frame where you see the fair value gap. Of course, that fair value gaps that can be found on higher time frames will take longer to be filled, while fair value gaps which we can identify on lower time frame and which, by the way, have a lower probability of being filled, not necessarily as a lower probability of being filled, but they actually are not that important. If you were to see a fair value gap on a lower time frame, of course, the amount of time needed for that to be filled is going to be a lot smaller compared to higher time frames for value gaps. If we were to consider this candle as our middle candle, then we would take the high of the previous day, and we can see that we're still missing the high of the previous day to be touched by the low of the following day. So it means that between the high of this candle till the low of this candle, we do have a fair value gap. Now, just to give you a quick insight on fair value gaps. So in order for a market to be efficient, any buyer needs to be paired with a seller. If we have more buyers than sellers, then it means that our market is not efficient enough. If people want to buy, but there is a shortage of merchandise, let's say, then we do not have a trade, right? Nobody's trading. Nobody is making any trades, any transactions, right? If you go to the market and you want to buy tomatoes, but there is nobody selling tomatoes, then there isn't an efficient market for the tomatoes merchandise. Okay, so when you are buying Euro USD, you're actually buying Euro and you're selling US dollars. Okay, as opposed to when you're selling Euro USD, you're actually buying dollars, US dollars, and you are selling Euro. Okay, so we have in here for this day, which was July the 21st, we have a lot of people willing to buy Euro, but we do not have a lot of people willing to sell. Of course, that the market and the algorithm is not going to stop because of that. It will continue. It will abide to the avalanche of buyers coming into the market, thus creating this fair value gap. So it means that in here, between the high of this candle till the low of this candle, there isn't an efficient market. So we have a gap, we have a hole in the efficiency of this market. A lot of people willing to buy euro, but not a lot of people are willing to sell it. Okay, so what we're actually anticipating in here, because especially since there has been a lot of time, so from the 21st of July, today is the 27th of October, so it's been almost 3 months, actually more than 3 months, since this fair value gap has not been closed. So we are expecting the market to close that fair value gap, just as it happened with the fair value gap that we had in here that has been perfectly closed, and just like we had with the fair value gap that happened in here, okay, which has eventually been closed by this movement to the downside, and then the market just continued to go up to new territories. The reason why we saw this bearish movement in here was simply to cover the inefficiency of this buying in here. People buying, but there was actually no one to sell the product for them, which in this case is euro. They were buying euro, but there wasn't anybody willing to sell it. So what we're expecting in here is for this fair value gap to be filled. And because we are seeing this within the 60 days period of time prior to the reversal spot, we are expecting this to be filled within the next 60 days or so, plus minus. Now, we know that we have had a reversal in the market. So the market went bullish for a few months, and then at the beginning of September, which is also the beginning of a new quarter, yearly quarter, we can see that the market starts to decline and we're actually breaking structures. So we broke the structure here, and then we broke the structure in here also, and then we broke the structure in here also. Okay, so we're breaking a lot of structures, right? So the market is clearly telling us that it wants to go lower. Now, do we know the market to have any reasons to go lower? Is there anything left unfinished within the previous 60 days? Yes, we do have this fair value gap, which really needs to be filled in order for this market to be efficient. We're seeing a reversal, okay? We know that we have a fair value gap that needs to be filled lower. We're seeing structures being broken to the downside, and we're also seeing the last bearish order block, which is this one in here, and which it seems that the market is unable to penetrate through, and it's actually rejecting this one all the time, right? It's rejecting here a lot, right? So the market just wants to go higher, but it just cannot do that. So we are pretty much considering that since we are already entering within the last 20 days from the 60 days cycle after the reversal point, which was in here on the 1st of September, we're actually expecting for the next month, which is going to be November, at least till the middle of November, we will expect Euro USD to go lower and probably go at least to this liquidity pool in here. And if it will continue to go lower, it will definitely reach the fair value gap that we can see in here. Another element that is actually telling us from the daily time frame that we might see this market going lower is the fact that if we zoom in to these days, to the last days, we're going to see that the market has made this high and then the market has actually made a lot of lower highs. So we have the high of the following day, and then we have the high of the following day, and then we have the high of the following day. So we can see that day by day the market is creating lower highs, right? And if we were to go and apply the same technique on the lows, we're going to see that we had a low of this candle, and then we had the low of this candle, which is lower, and then the low of this candle, and then we're having the low of this candle, which is a higher low. But the fact that we had made a lower high with this day, and then we actually, the next day, which is the current day today, we made a lower low, is actually telling us that the bearish trend is, or actually the bearish intention, I might say, is actually continuing. Okay, so this is the reason why currently I am on a bearish bias long term for Euro USD. Long term, I'm not necessarily referring at the next few months, but I'm actually saying, well, for at least the next 20 calendar days, I am expecting Euro USD to look for new bearish territories. As I said, first, I'm expecting the market to reach this liquidity pool in here, and then if we are going to really penetrate this with a very decided bearish candle, then I'm really expecting the market to make a retest of this and then to just continue moving lower until we will fill at least the fair value gap that we noted in here. Now, if we're going to go on the 4-hour time frame and see if we have some clue, some indication that the 4-hour time frame is aligning on a bearish bias with the daily time frame, then we're going to see a lot of information coming on. So we do have the market creating lower lows and lower highs in here, and then all of a sudden the market is creating higher lows, and then it starts to create higher highs and higher lows again, right? So the last high that we can see is this one, and this high has left from a bearish candle. So the last bearish candle that we can see prior to the formation of this higher high, that is going to be our last bullish order block. So we can see, can identify this candle in here as being our last bullish order block. Now, the moment that this is being broken to the downside, it turns into a bearish breaker, and then we can also identify which is the source of the sells coming in this market that has actually led to the switch in direction. Okay, so we were on a bullish order flow, and then when the last bullish order block has been broken to the downside, it has become a bearish breaker, and then we can see that the market starts or tries to go up again to create new high, but it cannot create a higher high. It just stumbles upon the source of the sells in the market, the source of these sells, and then we can see a huge reaction coming off of that bearish source from the 4-hour time frame. So at this point, we can safely say that we are in a bearish order flow on the H4 time frame. So I'm going to minimize this right here, and we're going to keep in mind the fact that the daily time frame is indicating to me a sell, and that also the H4 time frame is indicating to me more sells than buys. Why? Because I am in a bearish order flow, so I will always try to look for bearish setups, right? Whenever I am in a bearish order flow, I will always look for bearish setups. If a bullish setup will appear, but I do not have any reasons on the 4-hour time frame to take a bullish trade, then I will not do that, okay? So right now, the higher time frame is indicating to us sell, right? So what we need to do next is just to wait for our pattern to form, right? So we need to go on a lower time frame, and as you know, my most loved time frame for entries is M15. So in here, we're going to wait for the market to either go above the high of the previous day, or we're going to wait for the market to create for us our bearish pattern near an important zone. And if we're not at or near or above yesterday's high or previous day's high, then the most important following zone that I will look for the market to create my bearish setup is going to be at OTE zone. OTE zone, it means that we're going to take a Fibonacci retracement and we're going to identify which is the high of the previous day all the way till the low of the previous day. Okay, so from the high till the low of the previous day. If the current day has actually went lower than the previous day's low, then I'm going to draw my fib all the way to that lowest point, which is going to be this low in here. Okay, and I'm just going here because this is the highest point of the previous day. Okay, so right now we have defined our OTE zone. So OTE zone is from Fibonacci retracement level 79 till 62. And this is always the best spot to enter the market. If, again, I repeat, if the market has not reached the previous day's high. My pattern has been formed. We are seeing this bearish breaker in here. Okay, and right now we can also identify which is going to be our source, the source of the cells, of these cells in the market. So the source of the cells is going to be the last highest candle, which is this one in here, right? So my stop loss will always be 10 pips above the source, right? Which is here. Okay, roughly this is 11 pips, but roughly because we also need to make sure that we are covering for any spread that the broker might have. And then naturally the take profit is going to follow a logical course of action. So I've entered here, which was a pretty early entry, but I'm not really afraid of that. So I'm going to open another 0.20 bearish trade. My stop loss is going to be the same, 10 pips above the source. So this time I'm having a lower stop loss, okay? For my early entry, I'm having a roughly around 27 pips stop loss, while for this entry, for this last entry, we're having around 16 or 17 pips stop loss. The moment that my trade is going to start reaching for potential reversal points, which are going to be these lows in here, I am going to start taking some of my profit off, right? So you could say that I am going to have some sort of take profit levels. Yeah, I think this is it, you guys. I really wanted to make a smaller video, but it seems that I'm really unable to do that because I really like to talk a lot, apparently. So yeah, I really hope you enjoyed this information, and if you liked this video, if there is anything that you find valuable in my videos, make sure to let me know down below in the comments. You can also visit my Telegram channel. I do post my setups in there. I'm pretty active on that group actually, and it's a small community currently, but we're actually growing, and we would really love to have you there, guys. Now, if there is anything that you would like me to explain more in depth. If you have any ideas on new videos on subjects that would really be useful for you, then just make sure to comment down below. I would be more than glad to make those videos for you. Thanks again for watching, and until next time, I wish you have a great trading.
Hey guys, so today is November the 29th and it's been 2 days since I made this video. As you can see, the market is already going for target number 2. We have already declined more than 180 pips already out of a total of 360 pips, the take profit that I am currently expecting at to be filled. So we've already declined half of the amounts of the pips that I'm expecting for this market to reach. So things are going pretty well so far. I will post updates on my Telegram group.